What's up, fam? It's your boy, Kamapoko, the noob Forex trader with big dreams and an even bigger. Well, let's just say my trading account is still pretty humble. Today, we're diving deep into the US dollar to Japanese yen pair. Stick around till the end because I've got some crucial tips and maybe even a secret or two I'll spill. Just don't tell anyone, okay? Especially my mom. She thinks I'm, like, a brain surgeon or something. So, how did your trades go yesterday? Me. My trade game was weaker than my Wi-Fi signal in the bathroom. Literally, 0 trades. Before we jump into today's analysis, let's have a quick postmortem on yesterday. If you're not into reliving past mistakes, feel free to skip ahead. I won't judge much. Yesterday, I was eyeing both long and short positions, but the market was like, nah fam, not today. It just didn't hit my sweet spot. I was looking to go long around here, and short around there. But hey, no entry means no losses, right? My wallet's still plump, even if my ego took a tiny hit. Then, I spotted another potential long setup around this area. The 5-minute chart even flashed a bullish impulse wave, and I was itching to enter at the support-turned-resistance line. But then I looked at the risk-to-reward ratio, and it was like, less than 1. And you know what they say, if the risk ain't worth the reward, ain't no point in getting on board. I just made that up pretty catchy, huh? In the past, I used to panic if I couldn't trade and just jump into random positions. But lately, I've chilled out. No more FOMO-fueled blunders, which means way fewer pointless losses. Remember the golden rule of business, folks. Buy low, sell high. Sell high, buy back low. Seriously, Forex is a business, not a casino. Though sometimes it feels like one when I'm checking my charts at 3 a.m. By the way, I try to share as much of my market analysis as possible on the YouTube community tab. So, hit that subscribe button if you haven't already. And if you're a real glutton for punishment, I post super detailed and super serious market analysis every day on my blog. Check it out if you're brave enough. Alright, let's get into the nitty-gritty. Today's US dollar to Japanese yen analysis. I'm all about that multi-time frame analysis, so we'll start from the top and work our way down. Just a heads up, I usually cover the weekly time frame in my Monday videos or on my blog. That's the super important one for the big picture, so you gotta check it out. My posts usually drop around Japan time, so depending on where you are, the date might be a little off. Just roll with it. First up, the daily chart. Boom. Here it is. On the daily, we've got a clear uptrend forming. The recent high is right here, and the last swing low is chilling over here. We saw a pretty big pullback to near that last swing low, but then it bounced back up like a champ. Right now, it's gunning for that recent high. The big question, are we gonna see US dollar to Japanese yen crash through 150 yen, or will the bears come out of hibernation and dominate? The last swing high on the weekly chart is over here, so there's a chance we'll see some selling pressure if it climbs a bit more. But honestly, the bulls are looking pretty pumped right now, so it's anyone's guess. Next, let's peek at the 4-hour chart. Bam! There it is. We had a strong first wave that broke the downtrend, and since then, we've been seeing higher highs and higher lows, creating a solid uptrend. This is our last swing low right here, so as long as it doesn't break below that, we're still bullish on the 4-hour. Now, according to my super secret and possibly flawed Elliott wave counting method, we're in the 3rd wave right now, which means there should be plenty of gas left in the tank. But again, we're approaching that recent daily high, so who knows what'll happen. It's like a high-stakes poker game, and I'm just watching with popcorn. Alright, last but not least, the 1-hour chart. Here she is. On the 1 hour, this is our recent high, and this is our last swing low. So, as long as the price stays above this zone, we're still bullish on the 1 hour. And honestly, for the 1 hour, that's pretty much all you need to know. Don't overcomplicate it, folks. Your brain will thank you. Alright, based on all that deep dive analysis, I'm gonna share my top secret, super duper, don't tell your mom strategy for today. Seriously, if this works out, you owe me a McDonald's. I'm talking a Big Mac, fries, and a McFlurry. Don't disappoint me. Today, I'm only looking for buy the dip opportunities. And my prime entry zone? Right around here. Why you ask? You really wanna know? Okay, fine. This is the previous high on the 4-hour chart, and if you squint really hard, you'll see it's also the last swing low on the 1-hour chart. But wait, there's more. The 21-day moving average on the 4-hour chart is also chilling right in this zone. So, I'm expecting some serious buying pressure if the price pulls back to this area. If it just keeps rocketing up, I'm ignoring it. Like that annoying relative at Thanksgiving. Just pretend they're not there. As I'm writing this script, I just checked the 5-minute chart, and the bias has shifted to bearish. So, for now, no short-term dip buying for me. If you're feeling brave, you could try to buy the dip on the shorter time frames, betting on that 4-hour 3rd wave to keep going. But me? Nah. No way. Jose. I'll only consider buying the dip once the daily high is clearly broken. Bottom line, I'm waiting for a pullback on the 4-hour time frame. That's the play, folks. Look, I can't pump out YouTube videos every single day, but I'm constantly updating my blog with the latest market info. So, if you're craving more, you know where to go. Alright, that's a wrap for today. On this channel, I'll be dropping more market analysis and sharing my trading journey. So if that sounds like your jam, and only if it's your jam, no pressure. Hit that subscribe button, give this video a like, and drop a comment below. Until next time, happy trading, and may the pips be with you.